Good morning, everyone. Hope you are all safe. Welcome to the earnings conference call of Cholamandalam Investment and Finance Company Limited. To discuss the 4Q FY21 performance of Chola and share industry and business updates, we have with us today Mr. Vellayan Subbiah, Chairman and Non-Executive Director, Mr. Ravindra Kundu, Executive Director, Mr. Shajin Varghese, President Housing Finance, Mr. Suresh Kumar S., Senior Vice President and Business Head, LAP and SME, and Mr. Arul Selvan, Executive Vice President and CFO. I would now like to hand over the call to Vellayan for his opening comments.
Thank you, Nishin, and good morning, everybody. Thanks for joining us for the quarter and year-ended results. Just a quick kind of summary on the quarter. The PAT for the quarter was at 243 crores, which is a growth of 470% over the Q4 of FY20. And the full year PAT was at 1,515 crores, which is a growth of 44%. Our AUM crossed 76,500 crores. We also took additional COVID provisions in the quarter of 350 crores. So the total COVID provision that we're carrying right now at the end of March is 1,100 crores. The NIM for our net income margin is basically at 1,342 crores, which is up 32% for the quarter, and 4,944 crores, which is up 22% for the year. PAT, like I said, is at 243 crores for the quarter and 1,515 for the year. So basically, just a quick summary of performance highlights. The disbursements in Q4 FY21 were at 8,071 crores as against 5,663 in Q4 FY20, which is a growth of 43%. And disbursements for year ended March 21 at 26,000 as against 29,000 the previous year, which is a decline of 10%. Decline in the full year is primarily due to lower disbursements in Q1 and Q2 during the lockdown. Vehicle finance has clocked a volume of 6,153 as against 4,703. That's a growth of 31%. And again, it's a decline of 13% for the year. Loan against property disbursed 1,191 in Q4 as against 589, which is a growth of 102%. And a marginal decline of 1% for the year. Home loan disbursed 538 as against 271, which is a growth of 99%. And overall for the year, it's 2% up in disbursements. And AUM grew by 14%, like I said earlier. The PBT ROA was at 1.8% as against 0.4% in the previous year quarter, while for the year ended March 2021, it was at 3% compared to the previous year of 2.7%. If we exclude the one-time provisions, the PBT ROA would be 3.8% for the quarter as against 3.7% for the same quarter last year. And the full year ended ratio also would be 3.8% compared to 3.5% for FY20. The ROE for year ended March 21 was at 16.9% as against 15.2%. And if we exclude one-time provisions, the ROE would be 20.9 as against 19.7. We continue to hold a strong liquidity position, 6,428 crores in cash balance at the end of March 21. That includes 1,500 crores which we've invested in GSEC, and it's shown under investments. And our total liquidity positions at 9,780 crores if we include undrawn lines. The ALM is comfortable with no cumulative negative mismatches across all time buckets. And the board of directors has recommended a dividend of 70 paise per share, which is a 35% dividend on the equity shares of the company, subject to the approval of shareholders at the ensuing AGM. This is in addition to the interim dividend of 1 rupee 30 paise per share that was declared on 29th January 2021. In terms of asset quality, at the end of March 2021, Stage 3 was at 3.96% with a provision coverage of 44.27%, as against 3.8 at the end of March 2020 with a provision coverage of 41%. Company created additional provisions as management overlays of 350 crores towards future contingencies And like I said, we're carrying a total of 1,100 crores in terms of the total additional provisions. The total provisions currently carried against the overall book is 3.58%, as against our normal of 1.75% carried prior to the COVID pandemic. And in terms of capital adequacy, we're at 19.07% as against the regulatory requirement of 15%. And finally, one other point, during the quarter, we also invested in Vishwakarma Payments Private Limited, a consortium of entities, and jointly applied for a new umbrella entity license for retail payments with RBI. So let me stop with that commentary, and I'll be happy to and the team and I will be happy to take any questions. Thank you. Thank you, Michelle.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Maruk Adajania from Milara Capital. Please go ahead.
Yeah, hi. Could you give us some color on collection efficiency in April in the vehicle segment?
Yeah, so obviously, kind of that is an area where it has turned significantly. We have a lockdown. Turn in June. The collections efficiency for vehicle was at 10%. Perhaps you can kind of give some more color and kind of you can talk a bit more about where we're at.
Hi, good morning. This is Ravindra Kundu. So the collection efficiency, overall collection efficiency against the billing for the month of March was 2,000 against the 2,120 crore. We collected 2,469 crore in vehicle finance, so that was 116%. And cumulative collection efficiency against the current month demand and debtors was at 62% level. As against that, in the month of April, we collected 1,979 crore against the 2,125. So that is 93% of the current demand, and cumulatively we have collected 50% of the total collectible pool. As far as the first bucket delinquency is concerned, in March our roll forward in the first bucket was 1.42%. In the month of April, the first bucket roll forward was 4.57%. So in terms of collection efficiency of first bucket, we did 99% in March, and in the month of April, 95%.
Okay, thanks. And I have another question on LAP, that your growth in the LAP book has been very good when competition is not growing their LAP portfolios. So what explains the difference? And what is the ECLGS given in the LAP segment?
Yeah, so let's go ahead.
Yeah, this particular thing was we even responded in the previous call as well, that pre-COVID we developed we prepared for ourselves for a growth trajectory, and where we have hired manpower and expanded branches. That is contributing the disbursements now in the current quarter. That is point number one. And we have disbursed about 800 crores out of this in the current year. We have disbursed 800 crores in the ECLGS.
Okay, what is the ticket size in LAP?
Average ticket size is about 50 lakhs.
Okay. And any geographic bias?
So we are significantly present in North, West, and South. These are our bigger markets. But currently, during the year 2021, we have also forayed into East, and we've started putting branches, putting manpower. And we want to be kind of all the zones in an equal position. So that's what is our objective. We don't want to carry any bias in the zones.
Okay. Thank you.
Thank you. The next question is from the line of Aditya Jain from Citigroup. Please go ahead.
Thank you. Confirmations on the previous question, sorry, the voice wasn't very audible. ECLGS is 800 crores in the current year. Did I get that right? And the second thing, the collection efficiency in April, got the response in vehicle finance. At the overall level, what was said? Sorry, it wasn't audible.
I wasn't able to hear that clearly. Was that for vehicle finance? Ravi, if you heard the question clearly, you can answer. I think it is for VF.
Okay.
My question was collection efficiency overall. Got the response for VF, but did not get what was said for overall. And the second part, the ECLGS disbursement in the current quarter, if you could confirm the number.
Okay. So the vehicle finance is actually 78% of the overall portfolio, or 72% of the overall portfolio. And I said that our first bucket collection efficiency has been 95%, and 5% has been rolled forward against the 99% collection efficiency of the first bucket in the month of March and 1.42% of the roll forward. The entire other divisions also are in the similar line only.
Maybe Suresh and Shaji, you can give some color if it's any different. Otherwise, Ravi, you can answer.
No, sir, it remains the same and almost same, a very marginal difference, but almost the same as efficiency is all the buckets.
Same as for home loan, there is no material difference than the overall what we just talked about.
Yeah.
Got it. Okay. On the movement in GS2 in this quarter, is some of so one, could you tell the size of the restructured loan book now? And second, is there any what is the amount of overlap between restructured loans and GS2?
Restructured loan. Sorry.
Yeah, go ahead. Yeah, please go ahead.
Yeah, restructured loan is at less than 2% of the overall book end of March. And there is no overlap between ECGLS and restructuring. We have kept, consciously we said wherever ECGLS have been offered, there will be no restriction.
Thank you. We would request the current participants to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. Also, we would request the participants to please limit your questions to 2 per participant. The next question is from the line of Abhijit Tibrewal from Reliance Securities. Please go ahead.
Yes, thank you for taking my questions. My first question is to Ravi, sir. Sir, if we look at your disbursements in the quarter, would you say we have kind of lost some market share in tractors and used vehicles? And the reason I'm asking this is, at least, in used vehicles, we are one of the largest financiers. One of the other peers, which is the largest used CV financer, I think they had reported very, very strong disbursements during the last quarter. So is there anything else that we need to kind of look into this, or anything to read into?
No, as far as the market share is concerned, we maintained our market share at the same level in tractor, two-wheeler, and construction equipment. And the commercial vehicles are also in the same level, Q4 to Q4. And if you see that, as far as the entire year is concerned, we gained little market share in tractor and construction equipment, and other products remained same.
So, Ravi sir, which OEM is this market share acquisition coming from in tractors?
That we cannot disclose in this meeting, but we are working with all the manufacturers across the country. We have a concept of selecting the geography and selecting the manufacturer and their product segment and grade them into grade A, grade B, grade C, depend upon the probability of default and our portfolio behavior. And based on that, we focus some product in some market more and some less. But as far as the focusing or working with all the manufacturers is concerned, we are equally treating all.
Okay. All right. Thank you, Ravi sir. And my last question is to Vellayan sir. Sir, in the last earnings call, you had suggested that we are working on a new strategy. In other words, you wanted to, tell all the investors and analysts about the new strategy that you are working on. Is it a good time to ask about this new strategy, or you would probably want to wait for the next earnings call to kind of update us on the new strategy that you are working on?
Yeah.
In terms of the broader direction for Chola,
Yeah. No, that's what I'm saying, right? So you shouldn't look at it as kind of anything, because none of the current is going to change, right? It's basically kind of how we build onto the current. So that's the first thing, right? So I'm careful on that language on new strategy, because you shouldn't think that, we're suddenly headed off in some new direction somewhere, right? So that's the first part. The second is, obviously, we've been looking at kind of, how we broaden a bit is what I would say. And that strategy is evolving well. I think by the time we communicated out to investors, especially because right now, this quarter, we need to stay much more focused on the core business, core businesses. So I would say by the time we communicate it out to investors, it will be next quarter by the time.
Right. Thank you. And just one last question, if I might squeeze in for Arun sir. Sir, I think our total restructuring pool is about 1,460 crores. That is, I think, broadly split as 280 crores for individuals and about 1180 crores for MSMEs. If we just do a back of the envelope calculation, the average ticket size actually works out to about 19 lakhs. That's 1.9 million for individuals and about 9 lakhs for MSMEs. In which product segments have you done this restructuring? Because I don't think in vehicle finance we'll have anything like a 18 or 19 lakh kind of a ticket size, right?
But much of it will be more in the LAP. And that is, I think it is generally, you should not take the total and try and arrive at this sort of averages, because that will take you down, in a completely wrong analysis. So it is, while in count wise, it is more on VF. In value terms, it will be more on the LAP. And that's what will make the difference.
Thank you. We would request the current participant to please come back in the question queue for any follow-up questions. The next question is from the line of Umang Shah from HSBC Securities. Please go ahead.
Thanks for taking my question and congratulations on a good quarter. Two questions from my end. One is the employee expenses this quarter look extremely high. If I look at the first 9 months run rate, is there any one-off in that line item?
Yes. What generally happens is we have certain incentive schemes that run, which we would normally provide through the year, because these schemes would be floated at the beginning of the year, and then we keep tracking the performance and providing as we move along. But this year, because of the first 2 quarters, we did not announce the incentive schemes, and subsequently, when we announced in Q3, we wanted to see the Q4 performance and provide for it. And then Q4, by end of for the first year, they have all met the targets. We needed to provide it. So it is something similar to like 1 year hit of these incentive provisions coming on into 1 quarter, around 50 to 60 crores. The second aspect is also that what we generally give as promotions and increments in the first quarter of every year, we deferred it because of COVID last year. And but once the COVID impact subsided, we gave these increments and the promotions and other salary increases in Q4 from Jan 1st. So it had the full quarter's impact in the current quarter. These two elements brought into a spike in the salary cost.
Okay. All right. That's helpful. And my second question is on outlook on credit costs. So clearly we are carrying extremely high provisions compared to what we have seen historically? And if you look at our asset quality at the end of the first COVID wave, I mean, we are positioned reasonably all right. So how should one look at credit costs, assuming that post first quarter things come under control? Should we see some provision reversals, or we kind of continue to maintain higher level of provisions across buckets through FY22 and maybe look at reversals only in FY23?
Broadly, I was very difficult to tell right now. Okay, so I think we need to see how this thing plays out and how this thing kind of continues. Because definitely April and May will be impacted. We are hoping and kind of expecting that it will begin to turn in June. But I think it's fairly indeterminate at this stage, right? So honestly, I don't think that we have or will be able to provide that perspective. Beyond kind of our capability to look at April and May at this stage. Right? Our belief is that because clearly the lockdown is affecting both earnings potential and our collections impact, right? And so I think we need to see kind of how this thing kind of goes beyond May, and then then to see how we basically manage that beyond it.
Thank you. The next question is from the line of Kunal Shah from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. So firstly, in terms of this COVID buffer, 350 odd crores. So looking at 750 crores we had, and last time we highlighted that we would be utilizing a part of it and would be comfortable keeping only 250 odd crores. So I think overall, per se, when we look at last 4 quarters, the way we have created the buffer and what has been created in Q4, that seems to be quite high. So is it like you are more worried in terms of the second wave disruption to be higher, that we have created almost like 50% of the buffer which was created during the first wave?
Yeah, I would just say that in the first wave, we were not sure at all what was going to happen, right? Now it basically, definitely, I think in summary, what you said is correct, right? Which is we are more worried about the second wave than we were worried about the first wave.
Okay. And secondly, in terms of the M2M on the securitized pool, was there any impact in this quarter?
No, not in Q4. There has been a small increase in the EILs because of I think 1 or 2 pools which were left out being also brought under the new MCLR rates. But I think they are more or less all of them are now running at the current rates with the bank, so there will be no further impact on this.
Okay. Yeah. Thank you.
Thank you. The next question is from the line of Varun Nabar from Nippon India Mutual Fund. Please go ahead.
Hi, sir. Good morning. Most of my questions are answered. Just one left. Could you give some color on the segmental breakup of the stage 3 number?
Hello, you want to take that?
Yeah, 1 minute. I'm just taking it out. So the vehicle finance is up 3%, and the home equity is around 7.2%. Home loan is at around 3.2%.
Okay, that's all from me. Thank you.
Thank you. The next question is from the line of Saurabh Dhole from Trivantage Capital. Please go ahead.
Yeah, sir, good morning and thank you. I have a couple of questions. First is, could you just talk a little bit about the restructuring that you did for the bus operator and the employee bus operator segments? Because as we can understand, they are still possibly impacted. So could you talk a little bit about that?
Ravi, you want to take it?
Ravi?
Yeah. So, see, you have seen that our restructuring is close to 1,100 crore as far as the vehicle finance is concerned. And, our portfolio of school bus and staff bus is very small to the overall size of the portfolio. And last time also we mentioned that we focused on the heavy commercial vehicle customer and the buses where the people are impacted from the operation. So majority of the pool is heavy commercial vehicle, and around maybe 20-25% of the 1160 crore is actually pertaining to the buses.
And sir, could you, I just, you gave us the number for the vehicle finance GNPAs, but could you also give the GNPA number for used CV both as on March 21 and as on March 20?
No, we don't give segment-wise.
Yeah.
Okay, any qualitative comment that you can add here?
Used CV is behaving better than the new CV.
Okay. Used CV GNPAs are better than...
in terms of relative sense, the HCV new for last to last financial year, yes, it is started actually, across the industry, new HCV last to last financial year started actually deteriorating, and that is also impacted the new HCV, although the portfolio size is very small. But in that line, if you compare the used CV, is not deteriorating.
Okay. And sir, lastly, one more data point. What was the PMAY subsidy that you received during the quarter?
Yeah. For the year, we received 21 crore. Of that, for the quarter has been, I'll just confirm. I'll just come back. For the year, it is 21 crore. For the quarter, I'll just confirm it back.
Sure, sir.
Yeah, just to add, this subsidy doesn't go into the income line. It goes into the credit of the customer.
Thank you.
Clear?
The next question is from the line of Anita from HSBC Asset Management. Please go ahead.
Hi. Thanks for the opportunity. In the first remarks, you just said something around the cumulative collection efficiency being like 62%. Can you just give some more color on this? Can you elaborate quarter-wise how this would match up, and how does that compare to the NPA numbers and the restructuring?
So cumulative collection efficiency is nothing but the whatever collectible pool which is coming from the current month demand. Suppose you take the March month current demand for vehicle finance was 2,120 crore and data was 1,888 crore. Put together, there is a collectible pool. So as against that, we collected 2,469 crore, which is 62%. So now this cumulative collection efficiency of 62% is more or less remain as it is, in the past also. If you take suppose January 2020 or say February 2020, that time also we were actually hovering at 63%. So that is one. Second is that you are asking that how it is impacting the GNPA.
Thinking that this number seems to be a little low, right? I mean, just a 62% collection efficiency means like 38% people have not paid, right? I'm not.
No. 62%. No. That's what I'm saying. 62% is against the overall collectible pool. The collected amount divided by total collectible pool. So when you take the total collectible pool, there are customers who are due for 6 EMI, 10 EMI. So all dues are added in the denominator, and numerator is that what you have collected. So that is not that 62% collection efficiency, 38% is not paid. If you want to see like that, then
clarify to her, the number she's looking for is the 95% collection efficiency rate.
Yeah, I'm coming to that only. So the collection efficiency of the first bucket, if you see how much DV have been collected and how much have been rolled forward, then you see that 99% of the overall gross asset of the zero bucket has paid, and 1.42% have been rolled forward. That is for the month of March. Same number in the month of April is 95% and 4.57% rolled forward.
Okay. And can you also give some color as to this year COVID impact versus last year? Are the same kind of customers actually facing stress, or is it like a different kind of customers we are seeing in this April? How are you seeing your trends?
As far as the April is concerned, till 10th of April, things were looking very normal and very few places lockdown were there. So our collection was going on in a similar pace what we did it in the month of March. From September onward, we were improving the collection month on month. It is continued till 10th of April. After that, because of the lockdown imposed, our people are not able to go and meet the customer. And whatever collection happened, it is actually over phone. People have paid the money digitally or they have deposited into the collection center. As of now, collection, as far as the April is concerned, if you take the data of the petroleum companies who have actually declared the data, in the month of December, the diesel consumption, again 2019, pre-COVID year, April 19, it is actually dropped by 10%. So capacity utilization in the month of April was actually normal. We need to see how May is impacted. And when it comes to which customer impacted in COVID-1 and which is impacted in wave 2, it is very difficult to say that the set of customer have not impacted who have been impacted in previous time. That we need to see and come back in detail in next time.
Thank you. We would request the current participant.
Yeah, Nishaji, and I just confirm back the figure on the last quarter we received in PMAY. For the year, 21.39 crore we had received PMAY subsidy. Of that, 16.5 is being received in Q4. That's the PMAY number. Thank you. I hope it clarifies.
Thank you. We would request the current participant to please come back in the question queue for any follow-up questions. The next question is from the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
Yeah, sir, thank you for this opportunity. My question is on the interesting point that you made that the used pool is behaving better than the new pool. Is it because of the end user? What is the color around that? I'll just ask all my questions in one go. The second thing is, NBFCs tend to help their customers during periods of distress because they know that they are catering to a set of customers who go through that. When would you start repossessing vehicles, given the fact that the economic shock is out of control? And the last related question is, related to the earlier question that was asked, in terms of the 62%, the credit losses, despite what the 62% indicates, is in line with historical trends, right? That is after you repossess the vehicle, sell it, and the customer dues are settled. Thank you.
Yeah. So, first question you asked that, at what stage we repurchase the vehicle. So we repurchase the vehicle only when the customer intention to pay is completely not there and start actually dodging us, and then and it comes because of the intention, or it comes because the business of the customer failed. And at that point in time, only when we continue to do the follow-up and realize that it is not going to work further, then we either discuss with the customer to come forward and do some settlement, or and in case that amicably cannot be done, then only we go ahead and repurchase the vehicle. That is one. Second is, can you just repeat what was your second and third question?
Sorry, the second was in terms of the used CV pool behaving better than the new CV pool. Is it the end use segment, or what is the characteristic which makes it perform better?
Yeah. That is specific to us. In used vehicle, we have been actually doing it across the country, and in the new HCV, we focused on the middle of the pyramid or the customer who are SRTO in nature. SRTO customer depend on in the they deploy their vehicle for transporting the goods from the load provider, which are OEM type or manufacturer type. So during the last 2 years, if you see, the industrial production has got hit and the GDP comes down. As and when the macro condition deteriorates, it actually impacts the heavy commercial vehicle, and their EMI affordability get impacted. And that's the reason it is not only for us, but all heavy commercial vehicle during 2019, 20 and 2021 got impacted. As far as the used commercial vehicle customers are concerned, they are utilizing their fleet, or they have one or two vehicles which is actually scattered in tier 2, tier 3 town, and also deployed into the transportation of agricultural goods, transportation of sand or bricks, or they are deployed for hardware. So that segment is not impacted during last 2 years. If you see, the rural demand has been good, and that therefore used commercial vehicle, as of now, the portfolio quality is better just because of the macro.
Thank you, sir. My last question was on the credit losses. You might have a cumulative collection efficiency of 62%, but that is okay because they may pay after 3 months, 4 months, 5 months, 6 months. But the credit losses are still in the band that you had historically, or do you expect that to go up? But I presume the vehicle prices have also gone up, so it's difficult. So that's why I'm asking the question.
Yeah. See, credit loss and overall provision, these are two different things. When we are saying that overall net credit loss includes the provision plus loss on sale of vehicle. Loss on sale of vehicle or repossession rate is remain as it is. What we are doing is that we are creating more provision on account of certain type of customer, or we are creating more provision on account of COVID. These are the two. That's the reason our net credit cost is looking higher. Otherwise, the rate of repossession or loss on sale are remain as it is pre-COVID level.
Thank you very much, sir, and good luck to everybody.
Just to clarify that, the credit losses component is higher, right? It's not driven by the repo, but it's because of kind of the movement from stage to stage being higher.
Yeah.
Those are the two component drivers, and the movement from stage to stage has gone higher, and we are seeing that it will be higher in the current time.
Thank you. The next question is from the line of Anand Bhavnani from White Oak Capital. Please go ahead.
Our first question is about stage 2 collection efficiency. You can share the numbers of what was it for the month of March and then for April.
We don't disclose stage-wise collection efficiency. Just to give you the direction that how the market is impacted, I told you that as against the March, there are two parameters. One is the absolute collection efficiency and first bucket collection efficiency, which talks about how it is impacted in April versus March. Up till March, things were improving month on month, but in the month of April, it got impacted.
Sure. And so second question is, on the outlook for the year. So in response to one of the earlier questions, you mentioned you're worried about stage 2. The company is worried about stage 2 a lot more than stage 1 of COVID, the round 1 of COVID. So how do you see, the prospect for disbursement growth for the financial year as you assess the situation today?
Yeah, I think to your question, we had answered that broadly in the first statement, right? Which is, I think it's very difficult to predict what will the prospects be for the year. Our current thinking and belief is that, April and May, will be bad, and then hopefully things will turn around in June, right? And that's predominantly driven by the lockdowns across the country, which is affecting both earnings potential and also affecting kind of our collections capabilities. But are we able to predict kind of how this whole year is going to shape out? I would think in general we're kind of averse to giving kind of guidance for the full year, but definitely in environments like this, I think it's very difficult for us to tell. I think there's so many uncertainties in this environment right now. No?
Sure. And sir, in terms of your overall longer term, trajectory of branch openings, do you see that getting affected this year?
Sorry, I missed that. The overall what?
Overall growth trajectory in terms of branches. You have been adding branches for last few years. How do you see that particular aspect of business?
The branch expansion will continue, and that will continue this year. Yes.
Sure. I'll come back and listen for additional questions.
Okay.
Thank you. The next question is from the line of Sunil Kothari from Unique PMS. Please go ahead.
Thanks for opportunity, sir. Are you getting my voice, sir?
Yes. Please go ahead.
Thank you very much. Sir, my question, this is not question, just broad thought process I would like to listen from Mr. Vellayan. Sir, during last 10, 12 years, you have created this institution from difficult phases. You have faced so many challenges. There were some weaknesses we have removed. Which are further in this your again active role you would like to improve on, and which area will be focusing on for the growth? You rightly said that current growth area will remain, but any further thought process on any other areas of growth where you may be thinking of, and the weaknesses or the places where you would like to see improvement as an organization? Thanks a lot, sir.
I think that's a good question. See, broadly, the areas that we're looking at is kind of an improvement as an organization first, right? I'd say three broad areas. One is frontline productivity, which is kind of both for the sales force and for the collections force on the front line. The second is, talent management. How? Because obviously our numbers now are very large in terms of people, and the talent management is a fairly broad area.
Hello.
We would request the participants to please stay connected as the line for Mr. Vellayan got disconnected. Thank you for patiently waiting. We have Mr. Vellayan reconnected, so you can go ahead, please.
Yeah.
Yeah, thanks. So I'd say saying like the second component was talent management, and obviously that is something that we're putting significant emphasis on. Both on kind of looking at the talent we attract into our system, and then kind of the amount of training we give them and how we nurture them within the system, and then what we do to excite and develop them. That's a fairly broad area. And the third is that in terms of process improvement, we're going to embark, and unfortunately this has been slowed down due to COVID. We're going to engage, on looking at lean implementation in our processes, right? And so, this is something that's traditionally done more in the manufacturing environments, but there are a lot of applicability here. So, lean implementation in our processes is something we're going to do. So those, I would say, are three broad areas that we're kind of looking at in terms of, improvement across the system. And in terms of, the broader strategy, like we articulated, we're looking at different models, right? I mean, I think the more successful models in India we've seen have been HDFC, Bajaj, Finserv. And one of them clearly is that it might require further broadening of the portfolio in terms of what we offer, and which is what all of the successful guys have done. And the second is kind of taking kind of a more what we would call an ecosystem view to things. Right? So that's where I think somebody asked a question earlier, and we're evolving that kind of approach, and we'll come back to you, with some kind of clarity, in the upcoming quarter.
Very useful, sir. Thanks a lot. Thank you very much.
Thank you. The next question is from the line of Chandrasekhar Sridhar from Fidelity International. Please go ahead.
Hi, thank you. Just a few questions from my side. One is, I think I may have missed it. Is the restructured book in the stage 2 numbers? Question one. Second was, what are your LGD assumptions as of now versus March of last year? Third, could you just share what is your stage 2 in vehicle finance and stage 2 in LAP? So if you could just split that up. And lastly, what was the write-off number for the quarter? Thank you.
Yeah, I'll take it, Ravi.
Yeah, please.
Yeah. So we will give you the stage 2 numbers. The stage 2 number for the current quarter is 4,231, which includes 1,500 crores of assets which had been restructured. We consider, though they could be grouped under stage 1, we consciously have kept it under stage 2, primarily because we wanted to provide it at a higher level, as well as to treat it as a slightly of a different category of risk. So that's on the stage 2. The LGD numbers is very difficult to give because it is like we split the pool of assets into multiple categories depending on either in the case of vehicle finance it will be based on sub products, and in the case of LAP it will be based on geography, etc. So the LGDs differ for each of these subcategories within that, and we will not be able to disclose this. And even if we do it, it will not make sense because then I have to give you the relative asset sizes, etc., and that's a long discussion by itself. I think, is that, sorry, did I miss anything else which you asked?
No, so I think the follow-up to this was just trying to understand how much of this additional provisioning is largely because of your LGD assumptions changing, and how much is the buffer. I'm just trying to understand.
The LGD assumptions actually, it is done on a 3-year average. So we have been so far, we discussed this in the past also, we have kept the COVID impact outside the LGD assumptions because COVID is treated as a sort of a one-time phenomena. So we have been using the LGDs of the previous years, which is the last 3 years, basis which we have been drawing the LGDs for each of these asset groups. So that is why we are separately creating this COVID and on top of it a management overlay. So this is the way we had approached right from last March, and we continue this approach.
Right. So I just had pending was what was the write-off number, and if you could just break up the stage 2 into vehicle finance and the LAP.
Okay. Shyam, can you project the stage 2 of vehicle finance and LAP? Yeah. Stage 2 of vehicle finance is 3,500 crores, and LAP is around 440 crores.
Right. And what was the write-off number?
Write-off number is around 60 crores.
60 crores.
Yeah.
Thank you.
Thank you. The next question is from the line of Sonal from Nirmal Bang Institutional Research. Please go ahead.
Yeah, thanks for the opportunity, sir. I just wanted to understand a little bit more on your LAP portfolio. What is the underwriting process that you follow? Who is the end user? And what is generally the tenor of the loan for LAP portfolio? My second question is employee cost. So was there any one-off in terms of ESOP expense that we recognized this quarter? And third one was on the investments that we've done for the NUE license. So what is the thought process over there? And how do we see this evolving going ahead? So that's from my end. Thank you.
So on the LAP portfolio, On the LAP portfolio, the customers are basically SME customers who are basically traders or small pharma distributors, restaurant, hotels, and small service industry people. And typically, these are underwritten through their financials, bank statement, repayment track record, and supported by a collateral of their either residential property or a commercial property. It could be even rented or self-owned, self-occupied. And typically these tenures are about 15 years, but generally the book stays with about 7 to 9 years in the book. But generally tenure what we offer is about 15 years. And our book average ticket is about, in fact, to be very precise, it's about 46 lakhs, and the LTV is about 50% is the book LTV.
Sure.
In terms of the QE question, kind of rationale for it. Sorry. Suresh, you were saying something?
No, sir. I think unless any questions.
Yeah. In terms of the NUE question and kind of rationale for it, I think there've been a couple of questions that I've asked, kind of, about a bit about strategy and direction. And broadly, like I've discussed, the thing that we see in this next phase, right? We talked about kind of this last decade for us has been to kind of develop a fairly solid loan book, and create platforms for growth around these three or four sets of businesses, predominantly vehicle finance, home equity, home loans, and SME. Going forward, like I articulated, we see a necessity and a requirement to kind of broaden the service offering. Though kind of NUE broadly is a financial service that I think is kind of going to be required at a country level. But effectively, NUE will be servicing more on the B2B side. What it does allow us, though, is to get a greater involvement in where the fundamental kind of pipes are going to be in the future, right, on the payment side. And I think all of it is headed in that direction. And so that allows us to build more services based on the understanding around those fundamental pipes, right? And so kind of, if you think of what you could do, because those pipes will be dealing with different people over time, it allows us to build more services around that. And if you see globally, payments has become a fairly core area that everybody begins to look at. If you look at financial services companies itself, 4 of the 10 largest financial services companies in the world are basically involved with payments in some form or shape. So we see that as a very core fundamental platform on top of which other things are built. And therefore we see it's important that we at least have the opportunity to participate in that platform. So I don't know if that answers your question on that.
Thank you. We would request the current participant to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. We would also request the participants to please limit your questions to one per participant. The next question is from the line of Nidesh Jain from Investec. Please go ahead.
Thanks for the opportunity, sir. So first, can you share the interest income reversal or the impact of interest on interest reversal for this quarter, if any?
35 crores is the number which is being charged up to the...
And it is charged to interest income line item.
Yes. It is a reversal of it because this interest income had been recognized earlier, so now we are reversing.
Sure. And the second, on the housing loan segment, if I look at the asset quality and if I compare it with some of the listed companies in the affordable housing segment, our asset quality is a bit inferior to them. So any reason why we are lagging behind on the home loan side? And any update on the housing finance company license that we have got from the regulator?
Yeah. On the first part, this idea, let me take. On a year-on-year basis, we have, of course, made a bit of progress from March of 20 at 3.5% of stage 3. We have now come down to 3.25 on a asset on book basis. And at an AUM level, at the managed assets level, it is now come down to around 2.71, inclusive of securitized book. Now, there are some markets, we had a bit of, learning of the past. We are definitely working on it, and we also wish to see as time passing this improves. So we are also internally kind of, taking a bit around some of the vectors, some of the learnings we had. For example, we have now focused only on, self-construction and ready resale. We have vacated the space of, early stage under construction and, properties at play. And we have also internally, built a capability on the property underwriting as well, specifically beyond the financial underwriting through, in-house legal and technical managers too. So, yeah, we are working in this direction. The early signs are visible, and we are also looking forward to making improvement in this direction. Now, yeah, this is, we are only talking about ourselves, where do we stand and what improvement we would like to make. Then probably, few of the players will stand. I have no comment on that. But yeah, we are also seeing the opportunity for some improvement. We are at it.
And on HFC, we have renewed, we have re-engaged with the RBI, and but it is, I would still say, going fairly slowly.
Thank you. The next question is from the line of Anirvan Sarkar from Principal India. Please go ahead.
Hi, sir. My questions have been answered. Thank you.
Thank you. The next question is from the line of Rikin Shah from Credit Suisse. Please go ahead.
Thank you for the opportunity. Just one clarificatory data keeping question. The ECLGS under the LAP, I understand, is around 800 crores. But what would be for the total book, including the vehicle finance?
So around the 2,000 crores.
2,000 crores, right?
Yeah.
Okay. Thank you very much.
Thank you. The next question is from the line of Bunty Chawla from IDBI Capital. Please go ahead.
Thank you, sir. Thank you for giving me the opportunity. Sir, one question on the cost of funds. As we have seen, we have reported almost last many quarters at a 6.3% cost of funds. So how we should see this moving in next year? And if you can share the data, what was the incremental cost of funds for us during this quarter?
The incremental cost is around the same level of what you said, around 6.5%. But it keeps moving a bit, because of availability of priority sector assets, lending opportunities or securitization opportunities, and also to some extent on the mix of the borrowing. As you have seen, we have moved down on our CP exposures to a very meager amount of 4%. So in the coming quarters, we can look at, recapitalizing the CP levels also to take it up to a slightly higher levels, which would help us to keep the cost of funds lower in the coming quarters. And I don't see, because of this COVID, etc., the amount of RBI increasing repo rate, etc., happening in the near future. Liquidity is surplus. But having said that, we need to again look at how this whole COVID-2 is going to pan out with regard to offerings from the banks and other borrowing opportunities.
And sir, write-offs, for the clarification, 60 crores you said it's for Q4. So can you share full year number?
Right now I don't have the full year numbers. It will be approximately around the similar level, 60-70 crores per quarter.
Oh, okay. Thank you and best of luck.
Thank you. The next question is from the line of Piran Engineer from Motilal Oswal Financial Services. Please go ahead.
Yeah, hi. Thanks for taking my question. I have a couple of questions. Firstly, I've noticed that our M&A CV and construction equipment disbursements, have picked up quite meaningfully and are higher than pre-COVID levels. And What I understood earlier was that we were going slow in this segment because yields were, it was really competitive and we weren't getting adequate yields. So what is the competitive scenario now? Are we able to price our product at the, at the rate we want, or are we gaining market share at the cost of yield?
Heavy commercial vehicle disbursement as against the previous year is down by 51%. And even the market share in heavy commercial vehicle is also dropped to 1.74% in the last financial year. As against
No, sir, I meant only fourth quarter specifically, not full FY21, only in the fourth quarter.
Okay. The fourth quarter, if you compare quarter on quarter, if you see that Q4 of the last year, it was the BS4 to BS6 transition was happening, and that's the reason the disbursement went up. As far as the market share is concerned, it is at the same level. It was 2% last year Q4. It is at 1.93% in this Q4. So the disbursement went up because of the industry expanded and supply went up and purchases have gone up. So there is no increase in terms of the share. As far as the construction equipment is concerned, we are in terms of market share, slightly improvement is there. It went up from 5.82 to 6.55%, just because that we have now started catering, some more market, like, the construction equipment or tractor or two-wheeler. These products have been developed during last 5 to 10 years. And we have been moving towards the different geography and different OEM and different customer segment, slowly, cautiously, one by one. So the addressable market goes up, and therefore my overall market share went up. So the strategy as far as the CE and SCE is concerned remains same, because it is actually quite rate sensitive. We are doing it cautiously.
Okay, got it. Thank you. And just sorry to harp on this again, but if I talk about employee expenses for the full year, now in FY19 and FY20, employee expenses were up despite adding, 10-15% to our workforce. But this year we haven't added to our workforce and the expenses are still up 15%. And especially given that it's a COVID year. So, is there anything more to read into this? And, how do we think of employee expense growth in the coming years, given that we will start, adding to our headcount incrementally?
So one important thing which Mr. Arul mentioned, Arul, sir, go ahead.
No, carry on.
Yeah, one important thing is that, we have added collection manpower in last financial year also, because of the collectible pool has gone up during this financial year. In spite of, keeping the sales force remains same, but the collectible pool went up. So to that extent, to manage the ACR, we increased the collection executives. That is one. Second is that the increment which was not given were also released in Q4 because the performance has been very good. In spite of the impact in the industry, if you have seen that, our performance have been good, so we need to release the incentives, we need to release the increments. So those things have happened in Q4, and there's a reason the employee cost has gone up. Now, going forward, we are going to add manpower. Definitely we'll add manpower just because, we, as I mentioned, we are moving towards the new OEM, new manufacturer, new geography, in 3-4 products which we have launched in for last 5 to 10 years. So therefore, to that extent, headcount needs to go up, and therefore, and also collection team members in terms of count also will go up, because collectible pool in the COVID phase 2 is also going up. So to that extent, it will go up. But at the same time, the asset and disbursement also will be aligned with that. And that's the reason Mr. Velan mentioned that we are also going to focus. First thing is the productivity. So we will try to keep the employee cost or overall OPEX to the average asset at within the range.
Thank you. That was the last question. I would now like to hand the conference over to Mr. Nischint Chawathe. Nischint, you may please go ahead. We would request Nischint Chawathe to please unmute yourself if muted from the handset. We would request the management to give any closing remarks.
Yeah, I think kind of broadly, Ravi summarized it. So, overall, like you saw, kind of last quarter's performance has been, but obviously we have to see how this is going to play out. And I think that our current thinking on this is that April and May will be slightly tough, and then things should turn around in June. But that will obviously depend on how COVID second wave plays out. But otherwise, things continue to kind of be on track for us. I think that's our broad commentary, and thank you so much for joining us.
Thank you. On behalf of Kotak Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
Thank you.
Thank you.